Saturday morning. There we are. Welcome on into the home office. That's how we do it. How's everybody doing? Saturday morning. Oh, hold on one second. We got to turn that echo off real quick. There we are. We're going to turn that down there. Perfect. Question, chime in the chat. Where are you coming in from? Where are you watching from today? Are you East Coast, West Coast? City and town and name would be great when you're coming in here to the chat. Thanks for coming into this live training here on Saturday morning. We're live on Instagram. We are live on YouTube. We got Detroit, Michigan in the house this morning. Awesome. And then we're live on Zoom streaming. So if you have questions on YouTube or on Instagram, chime in. The team's kind of watching those. We'll try and get back to you and answer your questions as you're coming in. If you're liking what you're seeing, give a little thumbs up and love it and share it. Really appreciate that. We got Miami, Florida in here, Boston, Massachusetts. Love it. I'm a huge Patriots fan. You wouldn't think that coming from San Diego, born and raised, but actually, I won't even show you, but I have an amazing Tom Brady signed football that is from Super Bowl 30. I'm like looking at it in the case right now. I don't know which one it is. I'll have to look at it, but fully signed. It's amazing. So I'd had enough with the Chargers ownership back in 2010, many years ago. I had enough. Emotionally drained. So I had to go elsewhere, and my friends were big Patriots, Boston guys, all from Boston, and they said, just come to the dark side, Justin. Come to the dark side. You've had enough. I get it. Chargers have, broken your heart. Really, the ownership. The team's great. Owners, not so much. But that got me to become a Patriots fan back in 2010. So it's been a great ride, 16 years. Now we're coming back. Big Padre fan here in San Diego as well. Pretty much back and forth between San Diego and Las Vegas. And then we have an office in Texas as well. So thanks for coming on and joining us this morning. For all the people kind of watching online and here too, a couple things we're going to go over this morning. Number one is really kind of this roadmap game, and I keep alluding to it. You can see it there. We put this together for everybody in our community so they can really follow a sequential process, right? The hand-holding and a procedure and system that helps you get from where you're at to your first or next 10 to 30 unit apartment deal, which is a great starting point for anybody that hasn't done it before. And how do you go buy a 10 to 30 unit apartment building in the next 90 days with $30,000, $50,000 out of pocket? Because you can absolutely do that. I'm going to go over a 12 unit here today, and then I'll also break down some financials of how these things are structured and the kind of money you need and how you would get in and the type of money that gets generated from these things. I think that's all really important for anybody that's looking to get into the multifamily space is, why are you ultimately doing it? I'm sure that all of you would agree that, the reason you're even here now is that you want more, right? You want more. Maybe you have a good job, you're earning good income. Maybe you're an entrepreneur, maybe you're a house flipper, you're a wholesaler, you're doing other types of real estate investing. You have other things going on and you're doing pretty well, but you want more. And you definitely want the generational wealth, the financial freedom, the passive income, which buys you time, right? Time with family, time with kids, time to travel, time to put it into your passions that you love most. That's why we're all doing what we're doing. I mean, would you agree with that? Chime in the chat if you kind of agree that you maybe want more. And you don't know exactly where that may come from. Multifamily is simply a tool, right? It's a tool to get to that. There's other tools out there. But is everybody kind of convinced thus far that multifamily is a direction you would like to go into if you could figure it out? Put a thumbs up in the chat in here on Zoom and then on Instagram. If I could figure this game out and get into a deal, and I have 30 to 50,000 liquid, like I can go buy an apartment building if I could figure out how to find good deals, right? And then how to raise the rest of the money, because obviously more money is needed. But if I could figure out how to raise and get access to capital and access to deal flow, I could do this, right? I have the dream, the passion, the desire to go want to make this happen for me and for my family. So awesome. Great, Jonathan. Appreciate that. And yeah, everybody on Instagram and on YouTube. So I want to show you a couple things. I'm going to start by just breaking down a 12-unit deal, the financials on it. And then I'm going to also show you the structure of that and how for as little as 30 to 50,000 bucks out of pocket, you could buy it. Anybody could buy it. Actually, this is a deal for one of the people in our community that they're writing offers on right now and trying to lock up. So I'm going to kind of show you that to you. So let's break into it. This camera's going to track me a little bit. Instagram, it may be backwards for you because of how the camera system works. So just try and read it. I don't know why they do that. I figured like they need to come up with something. Let's go, Mark Zuckerberg. Figure this game out. Why does it have to read backwards for everybody? So, okay. So this is a 12-unit deal. This one is in Ohio. It's in Ohio. They're currently asking $1,750,000 for it. So, you know, decent chunk of money. It's over $100,000 a door, asking $1,750,000 for 12 units. We're going to try and find out, is it really worth that? Can we pay that? Or what price point would make it a good deal? A good deal, okay? We're going to break into that. So over here, I'm going to try and walk this way, see if this thing tracks me. There you go. Perfect. So over here, this is the gross income. And this is gross potential income. Gross potential income is about $176,000 today. That's based on current financials, what they're producing today, all right? And can everybody hear me audio-wise online? Can you hear me okay online on Instagram and on the Zoom? Just to double check the audio real quick. Should be good to go. Okay, great. Then you're going to take out, you know, people always just take out vacancy, like physical vacancy of units being vacant. That's not what you take out. You have to take out what's called economic loss. That includes vacancy, bad debt, loss to lease, concessions. What do I mean by that? You have physical vacancy being, it is what it is. There's a couple units vacant in the building. That's physical vacancy. You also have to account for people not paying rent a little bit. Concessions you may have to give to get the people to move in. Loss to lease, that's the difference between the market rent and the actual rent that you're receiving. Sometimes it's the same, sometimes there's a delta. That delta has to be accounted for here because it's lost income, it's lost potential income. So we take that out. In this case, I think we're using, 5%, which is pretty low. So we're going to adjust that here, so stay with me. We're going to add in other income of $7,400. That could be pet rent, late fees, parking income, admin fees, application fees, RUBS, reimbursables for utilities, all kinds of things are included in other income. This is an important line item, by the way. For you to boost income on your apartment buildings, you need to have other income outside of just rent, outside of rent. So we add that in. Then we get to what's called EGI. This is called effective gross income. Effective gross income, right? So that's the 175. Then we're going to take out expenses. In this case, it's about 44% of that is the expenses, about 76 grand in expenses. We take that out. And then you get to this beautiful number that you may have heard of called NOI, net operating income. Net operating income. How many people in here are familiar with like this basic format of a profit and loss, because that's what this is, it's a profit and loss, of a rental property. And I don't care if this is a single family house, or if this is a 10-unit apartment building, or if this is a 400-unit apartment building, or if this was the Subway sandwich shop down the street. It's a business, okay? It's a business. It has top-line potential revenue. You take out some losses and stuff you're having there. You add in maybe some other auxiliary income you're creating in the business or the property. Then you get to taking out your operating expenses. And then we call it NOI for apartments, right? We call it NOI for apartments, but a business would call it what? EBITDA, earnings before interest, tax, depreciation, amortization, EBITDA. We call it NOI. Some people call it profit, right? But same thing, net operating income. Net operating income. So current financials are saying that this thing produces about 100 grand in profit every year. That's basically what it's saying. So that's the current situation, right? Current. Now, let's get into what the future holds and how to really look at this building. All right, so that's the current setup. Now we're going to get into, see if I can get this thing open here. We're going to get into the future. I call it the Proforma, right? What does the future hold? So if we bought this building, what could we do to it? Could we increase the rent? Could we drop expenses? Could we operate the property better? Like, what could we do to this building? So then we're going to go into what's called the Proforma, AKA future. So what we're saying that we can do, and I'm going to share the financials. So for everybody on Zoom, you're going to see this here. Okay, you're going to see what I'm about to share with you. You on Instagram will not see this. Okay, but that's why you get the board. Okay, so what they're saying and what we've analyzed is the future looks like this. Gross income, we believe we can boost it by increasing rents. We can get to gross potential income of $216,000. That's what we believe. We're going to take out, right, about $21,000, which is 10% for economic loss. Economic loss, same thing over there. Okay? Then we're going to add in other income of the same, $7,400. That gets added in. That gets us to our EGI number, effective gross income. Same thing over here. And we have that at about 200 grand, $201,000. Effective gross income. Now we're going to take out the expenses, same as we did right here. Same as we did right here. And that's going to be on this one, we got about $88,000. And that gets us to a profit or net operating income of $114,000. Okay? That's your NOI number. Now, we're presuming about, I think we have about a 6, current cap rate, they have it about 6.83. So why are cap rates important? Is anybody familiar with what a cap rate is? Anybody familiar here what a cap rate is? Put in the chat if you understand cap rates, or if you kind of understand in general what they stand for. So a cap rate is essentially the cash-on-cash return for the building without any loans on it. Meaning if we didn't have any financing, any loans that we put on the building, on the apartment complex, that is the cash-on-cash percentage return that we would achieve. So if it's at 6.83% cap rate, based on the financials, the current financials, right? They're saying at 6.83%, that means it's producing a cash-on-cash return of 6.83%. Based on the cash I have in the deal, I'm getting the cash percentage out, cash on cash. That's what that means. So 6.83%. Not bad for a cash on cash return. Now that's not your total return, by the way. That's just the physical cash production. Then you have appreciation, you have tax benefits, you have all these other things in multifamily that make it highly lucrative, which is why the wealthy buy apartments. I mean, it is what it is. There's never been a time in U.S. history that an apartment building has not doubled in value in 10 years. Through all of the crises, world wars, financial crises, stock market collapses, 1923, up, down, left, right, Timbuktu, never in U.S. history has an apartment building not doubled in 10 years. So, it doesn't really matter. Just don't lose the buildings. Buy them and they go up. That's just how it works, okay? So, 6.83% cash on cash return. That's the cap rate. That is what it is. So yes, Jonathan, your cap rate, the value, just so everybody understands, to determine a value of an apartment complex or any commercial building, right? And you're not going to be able to see it on this board. Actually, I may be able to do this. This will be helpful. Let's try this. It does turn. There we go, baby. So just so you guys know the formula for establishing value of any commercial property, apartment complex, anything. Real simple. Value equals NOI over the cap rate. That's it. So just basic algebra, if I can move the camera there. Yeah, basic algebra. If you know two of the three, you can figure out the third, right? So in this case, right, if the net operating income is $99,000 and the cap rate's 6.83, you can do the math on that, right? I mean, I could probably even plug it in here, and that's where we're getting to what they're saying is the 1.7 in change, right? Or I'm sorry, 1.4 in change. So that's what we think it's worth, right? They're saying, hey, we think it's worth $1.7 million, and we're trying to tell them, no, it's not. This building is worth $1.45 million, and I'm going to show you why. Okay, I'm going to show you why. And once again, on Instagram, you're not getting to see the deal analyzer I'm looking at right now because it doesn't do a share screen. But for all of you online on Zoom and YouTube, you can see right here that, we have an asking price up here, and I'll zoom in, see if I can get this thing to zoom up a little bit. There we go. So $1.75 million is what the asking price is. We believe, and we backed into a number that makes sense at $1.45 million. We have everything else in here. We got some reno dollars we're putting in here. We're putting 35% down on the building to make it work. Interest rates at 6.5%, which is pretty standard for a going interest rate right now in the market on a building like this. Here is all, and you're not seeing this on Instagram, but here's all the unit mixes, the rents they're getting for them. Here's the current stuff. Here's the future stuff, right? And here's all the expenses, current and future. So then you get down to the actual numbers here, and this is what I put up on the board that you see right in front of you, right? Same numbers. And here are the metrics. So people ask, well, great, Justin, you put up all the numbers. Like, what makes a good deal, Justin? Like, what makes a good deal? Why would I decide to go for it or not go for it? Real simply put, okay? This is what makes up a good deal. And there's a reason for it, and I'll explain. There are a handful of metrics that you want to track, right? But there are three really important ones that are going to dictate whether or not you can attract money into the deal. Because as I was saying, in order for you to go buy a 10 to 30 unit apartment building with $30,000 to $50,000 of physical cash out of pocket, that means the other money needs to come from people, right? It comes from OPM, other people's money. Now that could be our network, could be part of your network that we help build, could be other people's money, could be our fund. We have a $25 million fund. Could be all the above, right? All the above. But in order to attract that money to a deal, it's got to make returns that make sense for everyone, right? Would you agree with that? So here are the returns. You have to have a cash on cash return of 6 to 10% or greater. You have to have an IRR of at least 15% or greater. You have to have what's called an equity multiple of 1.8x or greater. Now let me elaborate on these for a minute. I'm going to stop sharing because everybody online on Zoom and on YouTube, if you're watching on my YouTube channel right now, and if you're on Instagram, I guess keep both open. Go to YouTube and come here so you get all the views. But YouTube channel, Justin Brennan YouTube, Multifamily. You can watch it live. We're streaming right there. You'll see what I'm showing in the deal analyzer. You see these metrics right here at the bottom? Average cash on cash return, equity multiple, IRR, right? We even threw in a couple extra ones, the 1% rule and the return on cost, right? If you're going to be doing renovations on a property, return on cost. But these metrics, they're all green, and these are all conditionally formatted, just so you know. If they're green, they're good. If they're red, they're bad. It's really simple. So let me show you what happens if we buy this property at the price that they're wanting us to buy it at, the $1,750,000. Let me adjust the price. So let's go to $1,750,000 on the price. Watch what happens. So no longer are we going to buy it at $1,450,000. We're going to pay the price they're asking, which is $1,750,000. All else is equal. Income, everything else, expenses, interest rates, we're keeping everything else equal. All we're changing is the price. Do we notice a problem? So now everything is red. Your cash on cash is red, your equity multiple is red, your IRR is red. Basically, the deal sucks. So you could buy it if you have all the money, but you wouldn't, because that would be dumb, and you're not going to raise any money. Meaning you can't attract money to a deal like this. Nobody would come in if they were only earning 9% a year on their money. They might as well keep it in the stock market. They might as well keep it in a 401k. They might as well keep it in whatever crypto exchange thing that they have, and why would they come into a deal like that, right? It's opportunity cost of money. However, I can attract money in if I can produce a return that's typically double the rate of what you're getting in your 401k. So just so you know, the S&P 500 and the stock market, if you go over 100 years, right? I understand some years are better than others, up, down, but if you median it out, you're at 8.2%. Historically, over the life of the S&P 500 and the stock market and all that stuff, 8.2% a year, right? So if we can double that, which in this case we are, and produce returns like this, then this deal makes sense, and I can attract money all day long. All day long, I can attract money into a deal like this, okay? Because not only am I getting them, and I'm going to show you the metrics here in a minute, but this is like the property level metrics, but then I'm going to jump over to what's called the waterfall. This is going to show you what your actual investors are going to make. So the way that these deals get structured, and I'll show this to you on the board here in a second on the screen. But let's break the deal down financially and legally and show you what you and the investors would make on the deal, right? So I'm on the waterfall page, and I know on Instagram you guys can't see this, okay? But if you were on my YouTube, you could. So Justin Brennan Multifamily, if you're coming in on Instagram, you can watch it over there live too, and I'm sharing the screen. So the money gets split up like this, and I'm going to zoom in a little bit further here so you guys can all see this. So here's how the deal gets structured. And watch on my screen. So you got $1,450,000 is the price. Okay, that's the price. We're going to go out and get a loan. We're getting a loan for about, and keep in mind, I have to account for other costs. You see there the renovation costs, closing costs, stuff like that, right? So just bear with me for a minute. Let's call it $950,000. That's going to be your loan. So that's a loan. That's going to be at about 65%, maybe 70% loan to value, loan to cost, loan to value. Now we got to bring in the equity. So that's the delta in this, right? So that's going to be what, $500,000? So this is the loan, this is the equity. Loan and equity, right? Now this is what stops most people. Because they're like, well, Justin, I don't have $500,000 liquid that I can go buy this 12-unit apartment building. So I'm done. I can't do it anymore. All right, that's the scarcity mindset. That's the mindset that doesn't have the skill set yet because you haven't learned it, how to utilize OPM and how to syndicate apartments, because that's about what you're about to learn how to do. So the $500,000 is going to get split up like this. And if you're looking on the waterfall thing that I was just showing you, it's going to go about 10%. So let's, for the sake of this thing, I'm going to put in here $65,000. And then the rest of it, because when you add in all the other stuff, you're going to be at about 400 and some change, right? I'll just put in that 465 or 440. So 440 is going to come from OPM, other people's money, and the rest is going to come from you. So now you came in with 65 grand. Okay. But the cool thing is when you do deals like this, you get fees for you syndicating the deal. One of the fees you get is called an acquisition fee. Literally comes out at the close of escrow. It's built into the closing cost of the deal, right? It's built into the total cost of the deal. And typically that's about 2 to 3%, all right? 2 to 3% of the purchase price. So in this case, the acquisition fee that you're going to get, and if you're online seeing the analyzer with me, you're going to get about a $30,000 acquisition fee, 29 grand, right? So 65 went in, 30 came out, right? So you're technically out of pocket $35,000 because 65 went in, that's going to earn money. You're an investor in your own deal. 25 or 29, almost 30,000 comes out, right? It's like Peter to pay Paul. So now you're physically out of pocket 30 grand, 35 grand, and you have control over a 12-unit apartment building. Are you guys, is that computing? I mean, it's really important to understand that. Because where else are you going to go? And for $35,000 out of pocket, you're going to own an apartment building. I mean, you couldn't even do that on a single family. And why couldn't you do that on a single family? Because single family is not investable with OPM. There's not enough zeros in the deal to attract and make it investable. Right? You hear it sometimes on Shark Tank, right? What do they say on Shark Tank when they're up there and they're talking and somebody wants to give 5% of their company, right? I'll give you 5% equity for 900 grand. And then the sharks laugh. Why? Because that's not investable, dude. I'm not getting out of bed for 5% when that's going to make me peanuts. So there has to be enough zeros in the deal. There's a baseline to have it make sense. You can't go walk in and give them people peanuts. So that's why single family is not investable with OPM, other people's money. Apartment buildings are. And everybody wants to invest in real estate. That is not your problem. Everybody on here right now wants to invest in real estate. I guarantee you, if you went out in your neighborhood and started asking everybody, hey, you know, is real estate, do you think real estate's a good investment? 90% of the people, yeah, absolutely. What would you do? What would it take to invest in a deal? Well, a deal needs to make sense. Financially, it's got to be a good deal. Okay, great. So it's a good deal. Well, then what? I need to like and trust you. I need to like and trust you before I'm going to give you 25 grand, 50 grand, 100 grand, $1 million, $5 million, all that. So then the question becomes, okay, well, how do I get the trust? Right? I hear it all the time. I don't have friends. All my friends are broke. Family's broke. The whole world's broke. I don't know anybody. I'm an, introvert and I sit in my corner of my house. Right? No, guys, look. Everybody wants to invest in real estate. You're never going to ask anyone for money. That's the greatest part about raising capital, raising money. Greatest myth, I would say, is you're not going to ask anybody for money. You're simply going to ask who they know. Because everybody knows people that know people that know people. Your family, if they're all broke, they know people. Trust me, they know people. And people know people know people. If the deal makes financial sense, the money will find it. Okay, trust me, there are enough people that want to invest in deals. And this is why we don't have the capital raising be millions of dollars. You can raise 450,000, 500 grand with about 5 to 8 people. 5 to 8 people saying yes with a minimum investment of $25,000 will absolutely come into a deal that's going to return, in this case, I want you to think about this for a second. Your investors are going to make, and you could probably split this up a little bit better. They have a 75-25. We'd probably go to an 80-20. But if we switch it to an 80-20, your investors, think about this. If I came to you and I said, hey, I have this 12-unit apartment building. Here's the summary on it. Who do you know that may have some interest? And the projected returns are about 15% a year on your money. And I'm going to help you wipe out income taxes. You may say, well, that's pretty interesting. Can you send me some more information? Absolutely. I'm going to send you the pitch deck. It's attached here and in the email. Here's a summary of it. You're in the pitch deck that's going to break the whole deal down, show you the numbers, the financials, everything, and get you comfortable with it. And then I'll follow up with you. But can you send it to some people you may know? That'd be very, very helpful. Who do you know? Who do you know? Not do you want to invest, who do you know? And the reason why you do who do you know is because they'll be happy to easily send it out to their friends if it makes financial sense. But what's ultimately going to happen is they're going to look at the deal, and if they have any money at all that's disposable, they're going to see that I only need $25,000 minimum investment to invest with you and own a piece of this apartment building. The deal makes financial sense. Great. I get to wipe out income taxes through proper depreciation. Great. Then they're going to respond back to you when you follow up with them. And you're going to say, hey, did you have a chance to send it out to those people you said you would, John and Joanne? Yeah, I did. They're taking a look at it. They may have some interest, but I'm just curious, Justin, why didn't you ask me? Right? You don't think I have any money, or you don't like me? Why didn't you ask me to invest in the deal with you? And your response is very simple. Listen, I didn't want to impose upon our friendship. We have a friendship, relationship. Didn't want to impose upon that asking friends and family just for direct money. But I figured you may know some folks, and maybe you can send it out to them if you like the deal and you think it's a good deal and all of that. So maybe you know some people. Yeah, I do. And I sent it out to them. They're looking at it. They may have some interest. But look, this thing looks pretty good. I'd like to chat about it. Boom. You created FOMO. You created the I pull it away sale. Everybody wants to be invited to the party. Nobody wants to be sold. Right? So what you need is a proper system. Right? You need a system. You need a roadmap. You need the hand-holding. You need all the stuff, because access to deal flow and access to capital are the two biggest roadblocks that stop anybody from going for it. 9 times out of 10, from all the folks I speak to, even myself when I got started, I was scared to freaking death. And our first apartment building was a 27 unit in Kansas City, Missouri. After we had done some duplexes and maybe a condo rental and stuff like that, the next big deals were the 27 units. Right? And I didn't have this roadmap. I had to figure this baby out as I was running through it. And I figured it out. I had a lot of Google, We didn't have AI just then, right? So I had to figure all that out and ask a lot of people. But you know what? It is never a lack of resources, everyone. It is always a lack of resourcefulness. Remember that. Remember that. Anything you're trying to accomplish in your life, it is never a lack of resources. It is simply a lack of resourcefulness on your part. Okay? That's a sobering reality. So when people tell me that everybody in their family, all their friends, everybody's broke, up, down, left, right, and you want to come up with excuses, I tell them, well, you're just not being resourceful enough. Because if you wanted it bad enough, you'd do it. You'd figure it out. Meaning, I guarantee you, if any of you are parents, right? If I teed this deal up on a silver platter to you, and this deal, as you can see, makes sense if we can buy it for $1,450,000. Buy it for $1,450,000. And I could deliver this thing in contract, right? And then all you had to do was come in with 65 grand and get a fee back and stuff. So let's call it 65 grand, and you could own this apartment complex. And I told you that you have to go raise $440,000, and then you told me you couldn't because you didn't know anybody, didn't know this. And I said, well, here's how it's going to go down. I'm going to kill your child in 3 weeks if you don't raise that money. And I'm going to ransom them, and I'm going to kid them, and I'm going to put a gun to their head. And if you don't raise the 440, we're going to blow their head off. I guarantee you'd get resourceful. I guarantee you'd figure it out. I guarantee you'd pull your head out of your ass and stop coming up with bullshit excuses. Because that's the only thing stopping you is the 7 inches between your ears. It's the excuses you keep telling yourself every single day as to why you can and can't do something. That's it. It's lack of resourcefulness. So trust me, if I instill the pain, right, the fear of it or the actual pain, you will move. You will become resourceful very quickly. I guarantee it. I guarantee it. Everybody does. Everybody does. Which is why if you give somebody a week to do something, it takes them what? A week. If you give them a month, it takes a month. If you say you need to get this done in 24 hours or I'm going to kill your entire family, it's amazing how that shit gets done in 24 hours. It's quite amazing. They get really resourceful very quickly. Hate to be so blunt, but that's the truth. I mean, let's keep it real. The only thing keeping you from where you're at and where you want to go, the only thing keeping you from doing this and buying apartments is the 7 inches between your ears. It's the bullshit stories you keep telling yourself as to why you don't do it, why you don't take it, why you don't go for it. It's very important to understand that, because I had to get out of my own way. That's the only way I was able to leap. I'd have enough pain build up in my life of watching all my other friends and people go out and kick ass and take names, and I was not leveling up. I was underachieving my potential. And there had to be enough pain point where that hit enough, where I finally said, F it, I'm going for it. I'm going to believe in myself, and we're going to go. And I'm going to let the chips fall where they may. And it's amazing, because we went from 20 units and $3 million in assets, and I felt like I was underachieving. And within 3 years of that decision, we went from 20 units and $3 million to 1,200 units and $200 million. All when I finally decided to get out of my own way and be resourceful and not come up with, well, I don't think so. I don't think we can. Oh, I don't know anybody with money. Oh, deals are too hard to find. Oh, the capital, nobody would give me money. Right? On and on and on and on and on. I mean, come up with, cry me a river, right? You finally get out of your own way. And what you need is the hand-holding and resourcefulness to go get it. It's really important. Any questions on that in the chat here? And thank you for coming in here, being online, Instagram, and all that stuff. But I want to open up to a little bit of Q&A. And just so you know, so I want to focus here on the equity side, right? Let's say it's the 500 grand. And I want to show you how these deals structurally break down, so that way you would understand it from a percentage standpoint, and how you would structurally, legally and financially split the deals amongst you and investors. Okay? And we'll finish up on that. Gosh, these whiteboards need to not dry so fast. To put some spray water on this guy. All right, here we go. So let's take this apartment building and split it out. So we have this nice little apartment building right here. And we're going to split this guy out. Right? We're going to buy it for $1,450,000, as we said. We know we need to bring in, call it $500,000, right? That's the equity that needs to come in. For simple math, I'm just going to say 450's coming over here, and 50,000's coming from me. So this is what's called the general partnership. This is called the limited partnership. Okay? General partner is you. Limited partner is your investors. The limited partners, for bringing in the 450, right? That's about 90% of the money. They're going to get about 75% of the deal. Typically, it's between 60 to 70 on average. For this deal, we're juicing it up a little bit. We're going to make it 75% of the deal. And they're also going to get what's called a 6%, sometimes 6 to 8, but 6% what's called preferred return. That is a baseline minimum return that they get no matter what. Okay, it's not guaranteed, but that's kind of the minimum return. All right? Oh, I'm going to, yeah. Thank you for the notice there. There you go. Now we're back full screen. Awesome. So now you can see it all. Thank you for that heads up. Yeah, and any other questions, let us know. Awesome. And make sure that goes to everybody. Here we go. So LPGP, they get 75% of the deal and a 6% preferred return. For that, you're probably going to have about 5 or 6 investors, somewhere in there. That's what it's going to take to raise that money. What they're going to ultimately get is they're going to get about a 15% per year return on their money, and they're going to get, to what I call it, tax benefits, right? So they get about 15% a year on their money. They get to wipe out income taxes. That is the benefit of owning the apartments with you. And they own the building with you, right? They're a limited passive partner. They don't have any voting rights. They don't have any control. You control the deal. But they're helping come in. Why? Because I don't have to do any of the work, and I get 15% a year on my money, and I get tax breaks to wipe out my income taxes against what I'm doing in my normal day-to-day life. Okay, sweet. So that's interesting. Like, I would do that. I mean, that makes sense, and I like and I trust you. The deal makes great sense. I'd be happy to come into a deal like that that's giving me that kind of return. Why? Because that's double the rate what I'm getting in my stock market on average, my 401k, everything else. And I'm getting all the tax benefits on top of that. Sweet. Sign me up. That will attract money. Anything less than that probably is not going to attract money. Okay, it's probably not going to attract money. So as long as the deal makes good financial sense and you have a process in place, right, that makes raising the capital, setting things up, building the trust and relationships and stuff, you are essentially building a capital company. It is a multifamily capital business. This is not a hobby, right? So if you're an entrepreneur currently, maybe you fix and flip, maybe you wholesale, maybe you're a W-2, high-income doctor, attorney, whatever it may be, right? You're essentially going to start a company. And we help people do that in the first step. It's called business in a box, right? It happens literally right here, right? Right there. Setting up the LLC in Wyoming or Delaware. Getting an investor website set up with CRM for client relations managers so you can manage all the investors and people. You're essentially building a business, and we help people do it. So that way you have your capital company, everything's set up, locked and loaded. It's not a hobby. You're not a one-hit wonder. It's not like, hey, you're doing this just for one deal. If you're trying just to do one deal, you know, joining a community or mentorship or even spending a lot of, you need to just go figure it out and do one deal. But if you're trying to build a little bit of a portfolio, maybe it's 100 units for you and your family that you can pass on to your kids. 50 units, 80 units, right? At least, 3-4 deals that you can have a portfolio with your family. It's producing you $20,000, $30,000 or more per month in passive income. I mean, what would that do for you, right? Think about that, because that's kind of like the baseline that I hear from a lot of folks is, hey, Justin, how can I produce $20,000 to $30,000 a month in more passive style income so I can have more time, right? I don't have to work as hard, don't do this. It's apartments. I'm getting the equity growth. I'm getting cash flow. I'm getting depreciation to wipe out taxes. All this generational wealth. I can pass it on to my kids and family. I can do all this stuff. But how do I do that? The answer is 3 to 4 deals. 3 to 4 10 to 30 unit apartment deals will get you to $20,000 to $30,000 a month. 3 to 4. So depending on how fast you want to run, you can do that in 3 years very easily. So if you're trying to plan your family out and get into this game and do this, within a 3-year window, you can have 3 to 4 deals and boom, you're good to go. And all day long, okay? The key is access to good deal flow, access to capital, access to good deal flow, access to capital. But that's why people need roadmaps, right? That's why people, you can do it alone. Sure, you can. It may take you longer. You may make bigger mistakes. Possible. Just depends. Or people join hands with others so that way they're not making big mistakes and they're collapsing time. And that's why I even did it, right? Once I decided, hey, I need the expertise. I need the knowledge. I need the help because I'm getting into a different game here. I'm not, buying a house rental. I'm buying a 10, 15, 20, 30 unit apartment building. So there is complexity to that. And so, but you can absolutely do it, and everybody should. And I would say, the typical avatar that is perfectly ripe for this is you need to be making currently over $80,000 a year. I can tell you that right now, because if you're not making enough disposable income to be able to play that game. Okay. So $80,000 or more a year, and you have to have 30 to 50,000 liquid that you can go lock up a deal when the time is right, when you find it, right? That's important because you have to have some skin in the game. Otherwise you will not raise money from people because they can't trust you, right? If I asked you to invest with me and I had zero money in the deal, you'd be like, okay, that's it, right? The trust is gone. So, but if you can show me a good deal and then your money's in it alongside me and we're investing together and then you're going to do all the work and I just need to be passive and collect a check on it. Yeah, I'm very, very interested in that. I'd be interested in that. And it's a $25,000 minimum. Okay. I'm very, very interested in that. But if you're going to tell me that you have no skin in the game and I have to put in all the money and the risk is all on me and I'm going to get returns of 8%, well, that's not investable. That doesn't work. Okay. So that's how this game. And then over here, what's cool is you as a GP, right? You're going to get 30 to call it 40% of the deal, right? But what's great is you get your kind of chunk here as a GP, but then your money, your 50 grand is actually your own investor in your own deal. You get to be an LP in your own deal. And then this is a bonus. This is what's called a promote, a bonus, like a tip, right? So you get this no matter what. And then you also get to play in the LP as well. You're getting the benefits of this, your piece of this, and all of that. So your returns as a general partner doing this, honest to God, your returns are going to be somewhere between 25 to 55% per year on your money. Let me give you an example. So like this deal right here that I was even showing you. Look at it. Use a general partner right there. Okay, you're going to make 34% a year on your money. You're going to bring in 64. You're going to make $281,000 on 64 grand. And this does not even include the tax benefits. You're going to wipe out your income taxes too. We're not even talking about that yet. I mean, you tell me where else you can pull that one off. And then the question is, well, okay, it sounds great, Justin, but like, how do I execute? Well, you have to level up the skill set. You have to be, you're an apartment syndicator, right? Remember, there is sweat equity and check equity, sweat equity and check equity, sweat equity and check equity. There's people that bring in the money, great. Then there's people that bring the know-how, the ability, the skill set, right? The skill set to execute this game. And if you can level up the skill set, find good deals, bring them to the table, operate, manage, control, right? That is a very, very valuable skill set to people with money because they don't have to do any of the work. You're providing a great return on their money. You're wiping out income taxes. You're running the show. As a result of that, you get to make a lot of money. It's very, very, very valuable for you to do that because your skill set's very high. You're bringing a lot of sweat equity to the table with some check equity, and you're rocking and rolling the show. That is apartment syndication 101 in a nutshell. With a few minutes left, I want to open up to a few questions for the folks that are in here and then online and then on YouTube and stuff too. Thanks for hanging out with us for the last 40 minutes or so. And open it up to a couple questions as we get going here and finish up. Question one that I have for you is, did I confuse the crap out of you? Or did what I show you make some sense? Put a thumbs up for the ones on Zoom if this made some sense. On Instagram, if this is making sense, thumbs up, little heart. Let us know that this is not going like that. Be very, very helpful. Very, very helpful. Awesome. Cool. How do you go out and pick a good market? How do you go out and pick a good market? That happens right here, by the way. Stage 3 of the roadmap, right? Right there. So you're going to pick a good market by looking at 3 metrics. And we have AI that does this for us in our community now. So you're not having to go search websites and do all that kind of manual data stuff. We have an AI that you literally put in a prompt and it'll give you the data. So you're looking at job growth, population growth, median household income. Job growth, population growth, median household income. Job growth first needs to be at typically 1% to 2% growth per year or greater in that market. And when I say market, let's talk about the state. Let's look at states first, then we go to cities second. So I would say take the state of Ohio. What is the general job growth market for the state of Ohio? What is the general population growth for the state of Ohio? And it'll give me the cities. It'll break it down, but I want for the state. And then what is the median household income, right, for the state? And then we'll break it down to the cities. So those are the 3 metrics, because if you don't have good job growth, then you're not going to have good population growth, and then your median household income is going to suck. So it's jobs, population, median household income. Those are the 3 metrics that help you decide a good market. Okay? And you're going to want to stay in the top 100, what's called MSAs, Metropolitan Statistical Areas, MSAs. You can look this up, you can chat GPT it, you can Google it. RAI helps people do it. And, rock and roll. Your 2 questions are, How do you find the right lender and how long does it take? Also, if interested in a deal, how do you buy time to put the presentation and the pitch deck of investors together? Great question, Gene. So, different ways for the lenders. We have all the lenders and capital partners in our community that we provide to our community. If you do not have that, you're going to do the next step, which is called the market trip. So that happens right here. And if it's in your backyard, great. If it's not in your backyard, you're going to travel to that market for a couple days. Prior to you going into that market, you're meeting local brokers, property managers, renovation construction crews, and the local lenders. These are local commercial banks and local credit unions. You're going to go in there and you need to set those up, meet those folks. We have a lot of them already set up, but that's why people come into communities, to get access to the financing. Okay. So that's that question. The other one is, if you're interested in a deal, how do you buy time? The typical closing time on a deal is 60 to 90 days. So you have 2 to 3 months. And we build that into your offer, Gene, to where your LOI, your letter of intent, which is AKA offer on the property, has 60-day closing with a 30-day option to extend. So that buys you the time, okay, to actually bring it all together. The other thing you're going to do in advance, Gene, to you actually getting a deal is step 6. It's called the capital foundation stage. Right there. Right there. Capital foundation stage. So why do we run that roadmap the way that we do? Because in advance of you ever getting a deal, and I hear it all the time, well, Justin, is it the deal before the money or the money before the deal? The answer is both. The proper answer is both. Because you're never going to get a deal locked up or make a broker give you a deal if you can't convince them that you have the capital in place, or at least you can get it. Right? But you can't actually get the capital in place until you can convince people that you can get a deal. I get it, right? So here's how you get around that. You have to set up the capital foundation, which is why when people come in, we do the business in a box. You are officially a multifamily capital company. And you're going to start with a website, so that way it looks like you're the part before you're the part. We're going to get you set up with the whole team and the operations. You're going to have an advisory board, which people lean on with us. They use us as a strategic partner to you. So that way you have clout before you have clout. You have a resume before you have a resume. You get the point? It's starting to set the stage for, hey, you are somebody before you're somebody, right? It's kind of the idea of fake it till you make it in a way, right? But that has to be set up because that's going to help convince investors. It's going to help convince brokers. It's going to help convince the marketplace that you can execute. Then we do the capital foundation stage where we meet the lenders. We set up a lot of what we call a mock deal. It's called soft commitments with potential investors. So that way they can see who you are. They can see your company. They can read your story. They can get comfortable with you to build the trust. You're going to run a mock deal through them as though it's actually going to happen. It's just not going to really happen. But that's going to warm them up to, hey, when you have a real deal, this is what it looks like. So that way, when you get a deal locked up, which happens right around stage 8, by the way, it's not your first rodeo. Like, you've already run a mock deal to go through that exercise and process. Okay, very, very important. Because that is how you raise money before you have money. You're never going to get somebody to wire you money in, Gene, but you will get them to say, hey, Gene, yeah, when you have a deal, I'd love to invest with you. This seems cool. I like this. When you have a deal, right? That's called a soft commitment. That's a warm-up. And you get that by running mock deals and setting everything up in advance. So that way they can look at you and say, huh, I didn't know that like Gene was doing apartments. This is pretty cool. Pretty cool. Like, I'm attaching the identity to you now. That you're not just a doctor, an attorney, a contractor, a plumber, or this or that, right? Real estate agent, flipper, wholesaler, right? Now you're like, oh, I flip houses and I buy apartments, right? I'm a doctor and I buy apartments, right? I'm an attorney and I buy apartments. You have that identity attached to you now because you went through the process of setting it up correctly. And now you have the capital foundation in place, which allows you to get the money you're talking about and kind of raise the money before you have the money. It's called soft commitments. And that way, then when you go to a broker, because what's going to happen at the 11th hour before you're going to get a deal lined up is the broker is going to come to you and he's going to say, hey, Gene, about to give you the deal. Would love to give you the deal. I have a couple quick questions. It's a buyer questionnaire I'm going to send out to you, and if you could fill it out. And in that questionnaire, it's going to ask you a handful of questions. How are you going to arrange your financing? How are you bringing in your money? Can you show me a proof of funds? What's your track record? What's your resume? And probably a handful of other ones. How are you going to do your inspections? How are you going to do this? How are you going to do that? Right? All that's going to go down in this little 2-page questionnaire. And if you don't answer that correctly, you're going to hit a wall. you won't get a deal. So that's why we set things up the way we set them up. So that way you are the part, you're ready to go, you're teed up. You've almost think of it like playing a sport, right? They don't just run out onto the major leagues, right? Or go, play in the National Football League. What do? They play college football first. They have a preseason, and then they go play the regular season. No different. Baseball, they have preseason, and then they get into the regular season. We're going to take you through the preseason first before you can go to the regular season and play ball in the majors. That has to be set up that way. Otherwise, you will fall flat. And this is how people get frustrated, right? They get frustrated. You show proof of funds, Jonathan, by showing your 10%, right? So you're going to come in with your 10%, and you're going to show them, hey, here's my 10%. I raised the rest of the equity. Okay, well, how do you raise the rest of the equity? Do you have your partners in place? Actually, yeah, because I've put them in place through our capital foundation stage, and we've done mock deals with them. We have a bunch of people ready to go when I have a deal locked up. And I have the financing in place because I've gotten a soft quote from our lenders that we also set up in the capital foundation stage. So by going through that, we set up the lenders, the capital partners, all those people in the capital foundation stage. You're warmed up. You can answer that question beautifully. You'll show them this proof of funds, and then you're going to say you syndicate the rest of the money. The brokers will understand what that is. If they don't, they're morons, but most do. And that's how you'll run the equity to get across the hurdle of the money side, which will come up, by the way. It's a great question. Great question. All right, we're coming up to the end of time. What I do want to do for you, though, and I'm going to do it for the folks that are in Zoom and on YouTube, is I'm going to share this link. If you guys are interested, depending on where you're at and what you're looking to do, I'm going to put two things in the chat, okay? If you're interested in community and mentorship, I'm going to put this link up. You can book a call from it and chat with us and our team if that's something of interest to you. Let me put that up. The one I just put in the link for everyone on Zoom and on YouTube is for our 90-day mastery program. That's much less investment, but gets you all the tools and resources, the deal analyzers, everything I'm talking about, and you can come in with me and work in my office for 2 days. And our next one's here in June 7th, June 8th. June 7th, June 8th in San Diego. We have a 2-day deal mission, we call it. As part of that multifamily mastery I just put in the chat there for anybody that has interest in it. You can come into San Diego and we're going to work together. We're going to set all this stuff up, all this, because it's all included in it. And you can get anything and everything. You're going to get all the resources, tools, downloads, a lot of courses, everything in there. That's part of the mastery. It's an entry level if you're just trying to kind of get your feet wet, but it's very, 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 very good. Has tons of stuff in there, enormous value. You can click on that link and take a look at it, see if it's the right fit for you. If you're really interested in mentorship and you'd want the hand-holding, and we do one-on-one, by the way, so it's an intimate experience. You're not getting on like 400-person Zoom calls. Click the mentorship link in there. You can click on that, take a look at it, see if it's something you like. Come in, let's set up a phone call. Let's chat about it, see where you're at, see where you want to go, see if it's the right fit for both of us. Because we love to partner with our students. That's how we grow too. That's why we do it. Is say, how can we actually create a network of well-trained investors around the United States that we're helping out? We get them to where they want to go. Then by nature, you're probably going to want to do more deals and maybe even bigger deals. We can partner. We partner with students all the time. We're doing it right now. And we'd love to come in with capital, with resources, our funds, sign on loans, raise money. All that stuff happens through partnerships. Our portfolio gets to grow. Your portfolio grows. Everybody wins. That's a win-win environment. We love that. So yeah, take a look at both those links in there if you have interest. And that's about it. That's all I have. Real short, kind of not going to pitch and sell stuff like it. But if you have interest in taking it to the next level, the two options are there in the chat for you. And then on what's your guarantee with the mentorship? Jonathan, pretty straightforward. If we can't help you find a 10 to 30 unit multifamily deal that makes financial sense in your first 90 days, we can essentially give one to you on a silver platter, right, through our Deals on Demand program. Deals on Demand program. Plus, it's a lifetime coaching. So it never sunsets, by the way. So you're in it. We want you in it forever. It's a community. It's a family. So you get it forever. It doesn't sunset. It's not like a 6-month thing or 12 months and you're out and you don't get access to stuff. So your access to the community, the resources, the tools is in perpetuity. It's forever. Okay. And then, yeah, we have we call our deal guarantee, first deal guarantee. And we do that by being able to serve you deals because we wholesale deals. We have a software, it's called Real Estate Radar, that allows us to go out and find deals around the country. We're doing that, and we can serve those to you on a silver platter. Okay. If you're not able to, if we can't help you find one through traditional approaches, we have that option for you. So once again, we can't guarantee you close it because that's your job, but we can serve you one and say, hey, take a look at this deal, makes financial sense, run with it. Like, let's go. Let's make an offer on it. It's teed up. We think it's good. Let's go for it. Right? Teed up deal, ready to go. Does that answer your question? Yeah, good question. Perfect. So yeah, click on those links, kind of depending on where you're at and what you're interested in. If a mentorship's right, great. If you want to kind of entry into it and get your feet wet, the mastery's perfect. Plus, you're going to be able to come into San Diego this next month in June and work with me in a closed environment like that. We're going to call brokers, set up the markets, find deals, opportunities, capital. All that stuff's going to happen in those 2-day deal missions. You get that in the mentorship as well, right? But the mastery is kind of a, hey, I'm not ready to go full-blown mentorship yet. Maybe I kind of get everything, get all the tools, get in, resources, all of that, and then maybe level up. And by the way, if you do the mastery and you upgrade to the mentorship within your first 12 months, we just credit you that the investment you made on the mastery, which I think is $997, by the way. It's $997, if I'm not mistaken, on there. Let me double check it. Yeah, $997. So we credit you that $997 towards your mentorship investment, if that's something of interest to you, within the first 12 months. Awesome, everybody. And if you go to the mastery, you'll see that in there. I'll share my screen. It's going to look like this if you go in there. So it'll break it all down. It's going to show you everything that's included in it, right? We even have a 30-day guarantee on that, by the way. So take a look at that. And if you want to get into the mastery and then get access, come in for some live one-on-one in San Diego, would love that. And that's next month in June. Okay, everybody, we are right at the hour mark, a little bit over. Hope this was awesome for you and you enjoyed it online with Instagram, YouTube, Zoom, all of it. And we will do these on Saturdays as kind of informational sessions for people to learn this game. And then, hey, you get a cool t-shirt if you want one. It says Got Apartments. So, okay, everybody, have a great Saturday. Appreciate you spending a little bit of time with us and rock and roll. Take care.